So, Kurt, I've been talking to a lot of people, and it seems like everyone wants to talk about mortgage, their mortgage, and I'm the same way. Anyone I talk to, I'm like, the first thing I do is complain about my mortgage, right? I got stuck because I was on a variable rate. I was in variable rate for about 15 years, and it's always done me good. And then all of a sudden, this happens, and I got stuck. Went from like 2 point some% to about 7.3%, right? So I'm like getting killed. My mortgage went up from $5,000 plus per month to $11,000. So I'm having to come up with $6,000 every single month, right? So yeah. I don't know. What are you on?
I'm on a fixed, but I was on a variable. And the way I seen the government operating right now,
when did you switch?
Last year. And this is, unfortunately, I waited too long to switch to fixed. It was at a point where I thought, okay, they can't go up that much because all over the news are like, they're going to keep rates low. And historically, they have never increased rates that much and that fast. So when they had the 1% increase, I believe in the summer of, was it last year? Or was it 2022?
Something like that. Where if not, there was like every 1 or 2 months, it was 0.5%, 0.75, 0.5%, nonstop, relentless for like a year.
Yes. And you know what? They said the rates were going up, but everybody else was like, no, it can't go up that much. Yeah. There's no way they're going to do it again. Yeah. There's no way they're going to do it again. So I held on to this variable rate thinking, okay, you know what? There's not going to be any more increases. They're going to wait to see if the impact of the previous rate increases have helped with inflation.
That's exactly what, we were told, right? Like, they'll go up by 0.25%.
It was a
give
scam.
It a few months and then put it.
It was a scam. We all got lied to. And the thing is, it's one of those situations is, when the government says they're going to do something that's going to impact you negatively, believe them. Because they told us it's going to keep going up. And everybody's like, no, there's no way. Just based
I was in the exact same boat. I think I was at like 2 point some odd. And then I think when I renewed it, they're like, hey, you can renew at 3.99. I'm like, what? Why would I pay like 1.5% or 1.25% more? You know what? There's no way it's going to go up that much. And then, of course, I got stuck. And then it did go up to like 3 and then 3.5 and 4. And of course, every time it went up, that fixed rate kept going up, right? So it went from 3.99 to 4.49 and then 4.99 and then it kept going up and up and up. And then at a certain point, I'm like, you know what? It's gone up so much and it's been a while since it's gone up. I'll just ride it out, right?
Yeah. And I feel like a lot of people are doing that right now. But the reality is that rates right now are really not that bad.
Historically.
But
if
I
you
think
look at the last 30 years or so.
Is that it's really hard for the people who bought houses, new construction 3 years ago, and were budgeting based on current rates at that time, right? So for them, this is a huge shock for them. And for some people, unfortunately, they can't afford it, right?
I know a few people that basically, if there wasn't, most of these people were like in their second property, where, because interest rates being so low, and they bought their houses early enough before the big boom, where their mortgage wasn't that bad. So they were able to save up 20, 30 grand, put money on a new build, expecting, I can afford it because I'll be paying $2,000 a month on mortgage and rent it out for $2,000 or $2,500 or whatever, make a small profit or, a little bit of money out of the pocket. And all of a sudden, when the house is finished, they went up to like 5%, 5.5%, 6%. So what they were forecasting at $2,000 a month went up to like $3,000 a month or $3,500 a month, right?
Yeah.
And all of a sudden they started panicking because now they can't afford it. They had money they put down on the property, and are they going to get it back? Are they going to be able to sell it? And they can't sell it as much because they might have bought it at peak.
And that's another part of the challenge, right? It's no longer just interest rates. It's the fact that because the market has changed and the values of certain houses have dropped. So now when they go to the bank for this pre-approved amount initially 3 years ago, now the house is worth less. So it's not just the higher mortgage payment. You now have to come up with more money to cover the difference based on the lower appraisal. And this is where you're seeing a lot of people scramble, going to the private mortgage route where they're paying ridiculous rates just to close.
Have you seen it recently?
Yes. I think it's all over the news where people are talking about where people are walking away from like deposits of $200,000 just because they can't call it the difference. They'd rather just
they just walked away $200,000.
$200,000. I think one was $300,000 to walk away.
God.
So you think about.
So they'd rather lose $300,000.
$300,000 because they can't close.
That is
But
crazy.
the problem is that the builder can come back and sue them. Right.
Yeah.
So if the builder has to sell it now for, let's say, $500,000 less than what they sold to you for, you're still on the hook for the difference.
God.
And how do you start over again?
So
this is not $30,000. This is $300,000, right? So
oh my God.
I'm like,
yeah.
man,
I know a few people that got caught. Like, I don't know exactly their financial impact. I didn't want to ask them and, just bring up, pain from them. But I feel it. And, like if you're in that situation, you have no choice. You're going to have to pay the mortgage or you're going to have to, cut your losses. I think a lot too, Kurt, is I think, people love to talk about their net worth, if you have a property because, you're getting by probably living paycheck to paycheck, but you think you're worth $1 million or you're worth $500,000 or like 1.5 million because you bought your house at like, 300,000. That same house went up to like 1.5 million. And all of a sudden you think that you're wealthy because your house did all the, the wealth, right? It made all the wealth.
It's turning out to be artificial net worth now because realistically, it's not like it is a tangible asset, meaning that it's a physical property, but you realize how quickly that net worth can change just based on the change in the environment outside that's causing the depreciation of these houses. So I used to think, okay, I have a net worth of $1 million based on a remaining balance, but you can see how quickly in 2 years that's gone down $500,000. Right. So now you've lost leverage to use your house to borrow to gain more money to invest in other places. So it has such a huge impact. So it's not just with you paying out more money. It's just the fact that now you have limitations with regards to accessing more liquid assets. And people don't look at it that way, right? Because again, especially if you're investing in other properties, but if you're paying more than what the mortgage is just to have a tenant in there, how long could you ride this out? And there's no guarantees they are going to decrease it because again, initially when they started increasing rates, they said, it could take 18 months to feel the effects. So why are you increasing it every 2-3 months? It makes no sense. Their logic makes no sense. These people, I don't know what they're doing. I don't think they know what they're doing, but I feel like they've paid out so much money during, the C years. And now they have to find a way to recoup it because what they say makes no sense. I'm sorry.
So let's talk about two things just to close this topic out. One is, and you already talked about it. My brother, he's at a 1 point something % mortgage, right? And others, they bought a property, it seemed like a little bit beyond their means, but when you're getting a 1 point some odd % rate, might as well take advantage of it, right? And maybe they, moved up a couple of times. They might have bought their first property at 200,000, 300,000, that doubled in price, but their mortgage didn't, right? So they moved up, and paying, a very small mortgage for such a big property. And all of a sudden they renew and they go from $2,000 a month to like $6,000 a month, right? So what's going to happen to those people? And how long do you think this is going to go on for?
Oh man, I don't know. Just think about that. Your payment goes up $3,000 a month, right? That's after tax dollars, right?
Yeah.
So the reality is that that's $5,000 more a month.
Right. Times 12 months, $60,000. You're going to make $60,000
more.
Yeah. Well, no wonder there's a lot of Uber drivers now, right? Trying to make up. And I bet you most of them own property trying to just to make their mortgage, right?
Oh, you know what? They're finding a way because unfortunately they're stuck.
Yeah.
They are stuck.
Yeah. But you know what? One thing, because I got stuck in that situation and I'm like, I'm not going to lose my house, over my dead body. So I figured out other ways to, make the money, and which I wouldn't have if I wasn't forced in the situation, right? I would have lived comfortably in the current situation. And all of a sudden I'm forced into this situation and I'm like, I can't pay, I'm not gonna be able to pay my mortgage. So I had to figure out other alternatives. And I think it's one way now that I, learned how to earn more. It's not like when the mortgage is going to go down, it's not like I'm going to, lose my sources of income, right? I already established that and I'm going to keep it, right?
It's either that or you cut back on spending on a lot of things.
Yeah, but it's hard to cut back like $3,000 a month.
It is, but you could see what's happening in the economy. People have stopped spending. Right?
Yeah.
So
I've heard, and you said like 18 months could be the timeline. I've heard some people say, I heard an economist, not someone I knew directly, but someone I worked with. They work with an chief economist of one of the major banks, and he was expecting the mortgage to drop at between October to December of 2023. And it has stabilized at least. And then it's going to, as fast as it went up, it's going to start going down, right? But I haven't seen anything yet. I haven't heard anything yet. Do you think it's going to be another 6 months, a year, 2 years? When do you think it's going to go down?
When's the next election?
Good point. So some of the publications, and maybe the producer here can put it up on the screen here. A lot of the big, forecasters in the financial industry have forecasted high interest rates for all of 2024 and most of 2025. And about 6 months ago, it was the opposite. They were thinking that it was going to go down in 2024. Mm-hmm. Many of the forecasters are now thinking it's going to stay up in 2024 and in 2025. In one way, my vengeful side, I'm like, you know what? I'm glad, let the people that were paying 1% feel the pain that I felt for like.
Yeah. But coming up to the renewal, I personally think you're not going to see any sort of drastic improvement to these rates until closer to the election. I'm sorry. I don't see it. I don't see it.